Fear has gripped the financial market since United States attacked Iran this Friday. Massive amount of bombing has been done on the city Tehran, joined by United States and Israel. On the first few minutes of the war started, the president of Iran, Ayatollah Ali Khomeini, he and his about 40 of their top leaders, they all perished, they all died. And since then, they have decided to immediately retaliate it. And today and over the weekend, all the US air bases in the Middle East, they have been severely attacked, and many of the air bases they have been obliterated in all these Gulf states like Kuwait, Bahrain, um, um, United Arab Emirates, Jordan, Oman, as well as I just heard in Turkey also the United States Air Base in Incirlik, it has been hit. So and the war is not going very well for United States, and a tanker has been basically like sunk in Persian Gulf, and Iran also threatened to shut down the Strait of Hormuz, where about 20% of all the petroleum and LNG, liquefied natural gas, passes to that Strait of Hormuz. So if there's any disturbance or the choke, tankers they cannot pass through it, it is going to create severe pressure on the oil and natural gas market. So far, on the second day of the war, three of the brave United States military person died, and about 7 or 8 persons they're severely injured. My heart goes out, but it's a very serious situation. And also, Iran has threatened to choke the Strait of Hormuz, where all this about 20% of all the oil and liquefied natural gas (LNG) passes through the Strait of Hormuz. Also, one of the tankers have been sunk. It has been hit. So all the oil tanker, all the insurance companies, they're not trying to insure anymore this tankers. The insurance rates have gone up, as a result of which pre-market the oil futures prices have gone up $10, reaching almost like $80 a barrel. So in a day, 10% spike. And if this Strait of Hormuz is choked out, potentially there could be the price of oil could go up even higher. Some analysts they have been saying that it could be reaching up to 120 to $130 a barrel, almost like double from where the current price is. So in the pump, anybody buying gasoline from the gas stations potentially could go up about the price double it. So if you're paying say $4 a gallon, gas price could go up to $8 or something like that. So it's going to create severely inflation, because anything to do with oil, basically like if you're going to buy tickets, the jet aircrafts they need to use petroleum petroleum energy to fly aeroplanes or drive trucks, like in moving things around, or heating in this winter, heating or cooking natural gas. So wherever it's a very essential commodity, oil, so it is going to create severe pressure in the markets. Also, potentially can it can basically skid the economy and create a recession immediately. And on top of this very negative situation, the stock market was been very going down. It has been one of the worst month of February, especially all this volatility related to the artificial intelligence stocks and the software related stocks, especially all the software companies. they're very fearful that artificial intelligence could be actually be taking away all their jobs, and the jobs that can be performed by AI. Say all the AI companies like Anthropic, they have created some models. Say for example, they could do some legal work or other uh, other, and so a lot of software companies, especially like companies like Salesforce, ServiceNow, Workday, Oracle, Adobe, where all their stocks have almost gone into a bear market territory. Some stocks have fallen even 30, 40, 50% even. So even like cybersecurity stocks, including say like CrowdStrike, that very excellent companies, Zscaler. These companies used to be at one time, they're very hot. Couple of months ago, these stocks, they have massively sold off. So this index IZV, they have basically fallen about 25 to 30% in last couple of months, and still nobody knows how much it's going to be. It may be falling. Similarly, all the crypto related, all the stocks or crypto, bitcoins, XRP, all other bitcoins. I made another video also. They have sold off, and they are almost at a multi-month low in all the crypto assets. And similarly, all the private credit companies, their stocks have sold off also. Especially the credit spread has increased quite a bit, because all these private credit companies, they actually financed all the software companies, because software companies have no assets, so usually they cannot get easy financing terms from the banks. So the private companies or the leverage buyout LBOs, these companies, they get funding when the software companies, they need to borrow money, so they pay very high interest rates, usually around 4% of the LIBOR rates. So they are getting severely hit, and a lot of the people have started withdrawing basically money from these funds, thinking that many of these software companies will not be able to pay off their debts. So there is a big amount of credit risk that is accumulating, and as a result of which companies like Blue Owl, or Apollo Global, KKR, other private credit companies have stocks have severely fallen. So that there's a big negative sentiment in the market. Although those companies have made good profit in terms of earnings, Nvidia made all-time earnings and revenue in recent a few days ago, but the stock, after it went up 3-4%, next day it fell like $11, followed by another $7 or $8, almost like 10% drop. Top tier bellwether company Nvidia, their stock fell like this. So the market is very skittish, and with this additional geopolitical instability, especially around oil price, so tomorrow the market is going to be very volatile. I see this like future markets, it's down. Let me see. Dow is down 700 points on pre-markets. S&P is down about 100 points, 1.4%. Nasdaq is down 450, almost 2%, 1.8% down tomorrow morning. So there will be a lot of sell-off in the morning. So what to do in this kind of situation? Severe amount of volatility, uncertainty, nervousness. So I made another videos also. So at this time, people should not panic, and try to see how to diversify your portfolio, or if possible, it may be a good buying opportunities also, because market in general, US market general, the economy is doing fairly well. Companies are profitable. GDP also, it has grown up about 1.8%, which is lower than previous quarter. Nevertheless, it's still growing, but the inflation has gone up. The wholesale inflation, it came up last Friday. It has gone up 0.8%. So inflation is very high. That is another reason why the market sold off on Friday. So, but this could create a good opportunity because market has sold off quite a lot the month of February. So you could dollar cost averaging, meaning buy something when the market is way down and buy some more if it goes down, or if it turns around, it could be buying in the dip kind of like situation. But nevertheless, the market is very volatile and there is a lot of nervousness in the market currently. Unless this issue is resolved, geopolitical situation between Iran and United States, and they basically have some kind of settlement, it's going to remain like this for some period of time. So please, I'll keep you updated and hopefully you like this video. If you did, please subscribe it and appreciate if you hit the like button, and thank you and have a nice day.